welcome to your trades the week ahead, and what a week it has been. Marred with intraday volatility, though on a net basis we managed to gain a good 3% for both the Sensex as well as the Nifty. The broader markets, you could complain about Friday's performance, but they too on a net basis have been gainers. In fact, they've outperformed the frontline indices with almost a 5% gain coming in for the Nifty Junior as well as the CNX Mid-Cap Index. Sectorally, it was all the way cap goods as well as banks which outperformed with a near about 7% notch up coming in for each of the sectors. And you'd largely have to say net across the board there were green ticks coming in. So let's quickly go across to our experts and talk about how to trade the market come Monday morning. Remember, we're in the thick of earnings as well. So how to deal with individual sectors and the market views. Joining us right now, Gultik Chandani, investment advisor, as also Mitesh Thakkar, who will join us and talk about the technicals of this trading week. Mitesh, I want to come to you first. You know, interesting day on Friday. Even though we started off on a weak global setup, the Nifty eventually managed to defend 7600 as well as 7650. What's that telling you about the market's inherent strength?
So I think we have been talking about this, that after 5 days of correction, since Tuesday we have been possibly looking on the upside. The indicators have been moving on the upside, with the Bank Nifty kind of coming up nicely from support areas of 14,400, which was the election day result cap. And the CNX IT participating because of TCS numbers. I think clearly the short-term buy should be on the upside, and unless until we start breaking below 7575, I think the Nifty with some kind of choppiness, with some kind of volatility, will possibly retest the recent highs of 7,800. So that a good part of the journey appears to be over. We have already moved up by about 230, 240 points from the lower side. But I think there's still some kind of upside left. We are not seeing a start of a new trend or a new uptrend in the short term. But I think that this appears to be a move wherein the earlier highs could be revisited.
Okay, on that positive note, let's also tell you that sectorally perhaps it was only the FMCG space which managed to close with the tick of a red loss, I should say. But capital goods, metals, Bank Nifty, these were all the top sectoral gainers this week, with in excess of 6 to 6.5% gains coming in a piece. You also had the BSE Power Index, which surged almost about 5%. The BSE Realty Index was up 4%, and autos as well put on a strong show with a good 3.7% to themselves. The Nifty gainers this week, Tata Steel, that was a strong performer with a 12% uptick. You also had the likes of a Hindalco. IDFC was a very smart performer amongst the financials. Axis Bank, Kotak and ICICI Bank, all of them put on a very good show. But Gul, I want to get your thoughts in on IT as a pack. While clearly the market trend doesn't seem to be favoring, the pure defensives and IT being part of it as much, you're seeing high beta cyclicals really take center stage. But then you have the IT companies come in quarter after quarter and talk about such strong growth projections. As an investor, would it be prudent to stay put into IT if you are? And if you don't have money put into IT names, perhaps dips would be the correct opportunity then?
I would say the dips are the best opportunity to invest across the board in this market. But having said that, I think IT, except for a few companies, I have not yet become positive on Infosys, but the others I think are a core holding in the portfolio, just as banks and in more private banks, one or two, public sector banks, and metals and capital goods. All these are basically the core holdings, top holdings in the thing. And FMCG, I must not forget. And FMCG holdings, if you see, everybody has cut it down to the bone now. So somewhere you'll see an uptick if the numbers start showing up. The stocks will start performing now, and we all expect that the economic environment has to improve, so the consumption will improve. Ultimately, these are all integral parts of your core portfolio. You change your allocation based on the volatility in the market and the future growth of the economic environment. I think now probably there's a larger bet which at least I have taken on the B group stocks, which include probably some small caps and some mid caps also, and looking into the future. And this market looks evenly poised to go forward. I don't know about the next week and the next month, but I think if you see over the next 6 months to next 12 months, I think you are headed higher than lower. So I would use every correction to get into the market.
Mitesh, I want to take a near-term view from you on IT. You know, the likes of a Mindtree, they've surged, almost 11% this week. And then, of course, you have also names like a Hexaware, Persistent Systems, etc. What's the sense that you're getting? In the near term, would it make sense to be in the mid-cap IT space, or do you think large caps would give us better returns?
Traditionally we prefer trading large caps, but I think yes, individually there are some mid caps which are showing clearly interesting patterns. You've taken a name of Mindtree. The stock has been enjoying a good uptrend for last few months and now has turned sideways. So good consolidation happening, I think, between the range of about 910 to about 850. And I think once we start getting closings above 910, I think the uptrend should resume, and we can then look at possibility of the stock going towards levels of around 1000. The other one has been Persistent, has had a very good up move in the last 1.5 to 2 weeks. I think in the short term the stock would have met its trading targets, but I think eventually the pattern does suggest further upsides from current levels. I would look at a 10% kind of an upside, and I think 1450 to about 1500 could be a good range where the stock can head towards.
Well, the other newsmaker besides IT also has been the Reserve Bank itself, which has really been on a roll this past week. Firstly, they've eased norms to raise long-term bonds for infrastructure financing and granted the infrastructure status to affordable housing. And secondly, they've also released draft norms for payments and payments banks, that is, as well as small banks. Kul, do you like any of these stories from the financial space at large?
I have some of the NBFCs, and I think IDFC is there in my portfolio. So I quite like these stories, and ultimately it has to kind of wind into infrastructure somewhere, and thereby you have also effectively infrastructure stories. And I'm not so negative on the so-called PFCs and RECs, because this is temporary, albeit, and ultimately earnings will drive the numbers, the share price, and I think these companies itself are in a good space in terms of power and things like that. And it's an infrastructure, and thereby these also are now providing an opportunity. There's a temporary blip down, and this is a good opportunity to get into them also. But I think, yes, I agree with you that RBI has done a good thing and made them into, the SLR and CRR reduction helps in everything, particularly creating these smaller banks also. At least takes away shadow banking out of the system, hopefully over a period of time.
And Gul, I want your views. Two names which really sprung up in action and have seen a fair amount of build-up, Crompton Greaves and MCX. Do you like any of these stories?
Well, I had Crompton Greaves and I just sold out after this spike, frankly. And MCX is, it's a takeover story, and it's difficult. It's very, very volatile. And I don't think I want to hold it till I know who's going to buy it. And just because a few other people have got into it, it's not a reason that anybody else ought to chase the stock, because you really don't know what the underlying business is all about, what are the liabilities which are going to come along with that business. And hopefully, if some name, which is a good name, if it takes it over, then there can be a story going forward. Because if you remember, the public issue had been made at around, I think, 1400 rupees, if my memory serves me right.
Yeah, well, a 20% appreciation on Crompton quite clearly was a mouth-watering level to actually book your profits. But Mitesh, what is your view on Crompton? Do you think further up move is visible, or do you think investors should now book out after the tremendous gains that they may have made last week?
See, the closing swing high for Crompton earlier was on 10th of June was around 213, 214. And while for the last 2 days, that is Thursday and Friday, the stock has on intraday basis gone beyond those levels. I think we have not had a breakout about 214. In fact, today it did look like that, the stock will finish and close the day about 215 levels, but it kind of tapered off in the end. The structure is quite positive. The gap which was made on Thursday, I think has held on nicely. So wait for the stock to start closing about 215. I think once that happens, a 10 to 12% kind of a swing up move can be triggered. Or else, I think the stock might give some kind of pullback. A pullback to the short-term averages could be a good area to initiate long positions, which is around levels of 200 to about 202 on the downside.
Well, there was also a very strong move coming in on, besides banks and capital goods, of course, on the metals pack this week as well. In fact, you had the BSE Metals Index spring up almost 6.7%. Couple of upgrades as well coming in. Strong Chinese GDP data boosting the index. And, of course, getting a leg up from the rising aluminum prices. So Tata Steel, Hindalco, they were the top gainers this week. In fact, Hindalco managed to clock a fresh 52-week high as well for itself. Mitesh, what is it that you're liking from metals?
In fact, Tata Steel and Hindalco would be the top two picks in the short term. I think very clearly, as you rightly said, Hindalco made a fresh 52-week high, managed to get past earlier levels of 178, 180. So I think any dips to those levels would be good buying opportunity from a short-term trading point of view. Or if somebody is holding out, I think just hold with a stop below 177. I would expect targets of around 200 to be tested in the short term over here. Similarly, Tata Steel, I think, the earlier high in the June was around 575, so those levels can be revisited. But overall, the structure is quite positive and we have a slightly bullish outlook over here. I am looking at targets of 630, 640 to be tested in the next couple of weeks.
Done with the week with a 3% gain coming in for the frontline indices, a 5% notch up for the broader markets. But we're not done. It's going to be an extremely earnings-heavy week as well, which awaits us. And a couple of nifty names there. HDFC Bank, both slated for July 21st. You've got Asian Paints, Axis Bank, Ken. And then, of course, cement heavy as well. So ACC, Ambuja are all going to declare their numbers, as would be Wipro. So it would be interesting to see after TCS's excellent performance what Wipro has to do, and PNB as well. Kul, I want to come to you on IT. You've told me you don't like Infosys. What about Wipro? Is that a case and a strong contender in particular?
No, these are all three are there in my portfolio. The top companies, which is effectively Tech Mahindra, then the Tata company TCS and Wipro, and a few smaller ones as well. So I have only moved out of Infosys. I wasn't convinced as to what was happening, and now frankly I wish them all the luck, but there is no promoter now which is inside the company, and they are only holding shares from outside. So basically, there's no meat in the game anymore from any promoters. I want to see how it fares out going forward, and the current chief executive, I wish him luck, but he comes from a product company. So hopefully, if he turns around this business and he makes it into something which, we'll see over a few quarters, after that one can go back and look into it. But people are liking it, so I think I'll at least hold my rear guard on that and wait and watch and see what's going to happen. But there are a lot of other businesses which one can invest in, and particularly now with the markets doing what they are doing, Ayesha, there's so many small caps, mid caps, which are going to give you solid money over the next few years.
Would you like to give us any names then, Gul? Which are the small and mid caps which could make money for our viewers?
I can only say what I've invested in, and with a caveat that it doesn't mean that what I've invested will make money. I only hope to make money. I've invested in Lumex Auto Technologies, and I picked up a small number of shares in Balaji Mines, which is a small company trading at about 5p. This Lumex Auto ultimately is a reasonable group out of Delhi and is trading at about, I think, 8p or 7p. So I think there is an opportunity here, and ultimately now the B group, which used to trade in a band of 5 to 8p, has now started trading in a band of 8 to 12p. So I think there is some money to be made there. And both the groups are all right. They have in the past seen better prices on the stocks. And nowadays you really don't find shares which are trading at any old prices any longer. Including DCM Shriram I picked up recently because everybody has been chasing seeds business. And here's a company with a huge seed business, I think upwards of 1,000 crores if my memory serves right. And it's trading at reasonable, I think 7p or 6.5p, because unfortunately it has some sugar business along with it. So if you go dig deeper, you'll see this seeds business. I think there is immense value here as well. So I picked up these 3-4 companies and holding on, apart from the top line companies which remain in the portfolio.
And a nice 11.25% appreciation as well coming in just this week for DCM Shriram and the other names as well that Kul mentioned. Mitesh, want to come to you then for trading strategies for Monday morning.
Yeah. I would suggest buying into Exide. I think that's had a very strong price and volume breakout. Can be bought in the range of about 161 to 158. Keep a stop below 154 and look for targets of around 175. The other one is HCL Tech. The IT pack was clearly buzzing on Friday after the TCS numbers. But HCL Tech can give a fresh breakout if it starts getting past 1512. So buy then with a stop at 1489 for targets of 1560.
Okay, gentlemen, we're going to leave it right there. Gul, Mitesh, good to have you gentlemen on board with us. Done then on this edition of Your Trades. The week ahead, we'll catch you again on Monday morning with all the trading action.